What's up, everybody? It's the Digital World Podcast. And here we have an article that says how to get the wealthy to pay the taxes they owe. And you know, um, the support for taxation on the wealthy is getting louder and louder and louder. Now, why do I say this? Well, once I go through this article with you, you're going to know exactly what I'm talking about. So I'm going to get into it, going to read it, and then discuss it. It says, imagine you're out to dinner. At the end of the meal, you pay your bill, which helps meet the restaurant's food, rent, and wage costs. But some customers slip out without paying. They disappear into the night, leaving the business to pay the same expenses with a fraction of the revenue. This is what is happening to the U.S. government. Each year, hundreds of billions in taxes owed good goes unpaid, and this tax gap leaves fewer resources to pay our country's bills. Most working people whose employers deduct taxes and report their incomes are paying what they owe. It is disproportionately very wealthy people who find creative and sometimes illegal ways to slip out the door, and they get away with it in part because the IRS lacks the resources to go after them. And you're going to see here how they are advocating to have the IRS have more tools and more insight to people's accounts so that every single little transaction is monitored, and they're spinning it in a very positive light to try to get you convinced that this is the right thing to do, because those wealthy people, oh, we need to tax them up the wazoo, and we got to get rid of this tax gap. Just keep listening, it gets better or worse. But here it goes. As part of a plan to rebuild the IRS after a decade of decline, Biden has a sensible solution: require financial institutions to report additional information about taxpayers, which the IRS can then use to determine who might be evading taxes. So, remember, I did a video on how the IRS wants to be able to uh, monitor all accounts above $600 and see all their transactions. So, this is what this is getting at. And remember, that was a proposal for the year 2022. The requirement would be straightforward, and the additional burden on banks would be minimal. Banks would simply add two numbers they already have: total annual inflows and outflows for each account, to an existing form that they already provide to the IRS. Individual taxpayers would not need to do anything, and no detailed transaction data would be shared. And they say that now, but later, it's always just a step. As long as you get a foot in the door, that's all you need. Reporting this data is so critical because it gives the IRS a heads up when the taxpayer's true financial position, as reflected in aggregate account flows, differs from what was reported. Third-party reporting: independent information that helps the IRS to verify tax returns increases tax compliance from under 50% to over 95%. For the wealthiest taxpayers, income often falls outside of existing reporting scam. The single largest source of the tax gap is low visibility income, like royalties, capital gains, and certain types of business income, which disproportionately flows to the nation's wealthiest. As much as about one-fifth to half of this income goes unreported, so gaining visibility is essential to closing that shortfall. So here they're making the case, hey, like, we need to make sure that even the incomes that are not reported, um, they just want full control. That's the bottom line. They want to know every single thing, and they always are using the wealthy to make sure, or as an excuse to try to implement these systems. When in reality, folks, everyone knows there are tax loopholes that you can use so you don't pay taxes. Doesn't necessarily mean that it's illegal. No, if you could use the loopholes to your advantage, then why wouldn't you use it? Okay? And here, for people who don't understand this, they're easily jumping on the bandwagon and saying, yeah, let's tax the rich, this, and that. Well, folks, the real people it's going to affect is the middle class and the lower classes. The rich will continue to do what they're doing because they know how to use the system to their advantage. And it's the people who don't that end up suffering the worst because they don't understand how it works. And this is all just a way to be able to get into your bank account. It says the number of auditors examining returns has substantially shrunk over the years, and less than 1% are audited each year. And then I'll go ahead and skip this. Improved reporting also addresses severe economic and racial inequities in tax enforcement. Auditing the complex returns of high income taxpayers can take hundreds of hours per return. With neither sufficient staff nor a clue where to target its audits, the IRS is about as likely to audit a low paid worker who receives the earned income tax credit as a person in the top 1%, even as the amount at stake is much lower. It is an outrage that the wealthy who are more likely to avoid paying taxes so often receive a pass. Improved reporting, together with more agents trained to decipher complex tax returns, will allow the IRS to target high-end enforcement actions instead of focusing on low-income taxpayers. Folks, that you see how ridiculous this sounds? I mean, anyone reading this with a decent amount of knowledge about what's happening or of what they're trying to say will be like, this is complete BS. Complete. This is, it's an understatement to say that this is going to affect people, because this will completely change people's lives. It's going to be, it's almost like having a microscope on every single step that you take. Now it says lobbyists who want to protect the status quo claim that improved reporting would discourage people of color from using the banking system. These claims are wrong. They ignore that the policy is carefully designed to protect privacy and imposes no burden on individuals, and in fact would raise revenue to pay for initiatives and encourage households of color to become banked. Monthly child tax credit payments, for instance, can be directly deposited to bank accounts. And one thing I've always been saying is this is a way, like, this sounds like a CBDC. And if you've watched any um, of the various economists talk about this, they say where if you establish a CBDC in an account with the Fed, what would happen is it would bypass the middleman, which is the commercial banks, and now they can directly deposit your money to your account. So this to me makes me wonder, hey, is this a smaller frame of the bigger picture, and where they're trying to get people to accept, hey, we can make things easier for you. You don't have to go through all that burden, and it's instantaneous. And we're also helping people to collect all the taxes needed. Let me keep reading here. Better tax enforcement will advance the interests of honest taxpayers who deserve to know others are paying what they owe, and honest business owners who face unfair competition from tax cheats. This is why a bipartisan group of former secretaries of the Treasury, including me, endorse it. Congress should embrace this important provision. Doing so would generate substantial revenue and create a more equitable tax system. Buzzword right here. Not just ordinary American workers pay what they owe. Folks, I mean, reading this is it's very frightening, to say the least, because this is where we're going. I do believe that like we're headed towards a very, very scary time. And if you're paying attention to events around the world, you notice that things are not getting better. And it's time to wake up. Where this is reality. And the events in the world are signaling that something, is coming. Financial crisis, supply crisis, everything. So I hope this episode has brought you some value. Like and subscribe, comment below. Let me know what your thoughts are. Do you feel like uh, the cry for more, financial tracking is becoming louder? Let me know in the comment section below. This is the Digital World Podcast, and I'll see you in the next episode.